What to expect from the Austin housing market in 2023. I'm Eric Peterson, broker and owner at Kopa Real Estate. And the 2022 housing market was defined by two key things: inflation and rapidly rising mortgage rates. And in many ways, it's put the market into a reset position. Last January, I talked about how we needed to watch the inventory of homes for sale and interest rates as the Federal Reserve made moves this year to try to lower inflation. Mortgage rates more than doubled. And at the same time, we saw huge jumps in the number of homes for sale. So this was a double whammy for the real estate market, and it had a cascading impact on buyer activity and ultimately home prices. So what's ahead for mortgage rates in 2023? Interest rates shot up to over 7%, and as of the end of 2022 have settled back closer to 6%. Moving forward, experts agree it's still going to be all about inflation. If inflation is high, mortgage rates will be as well. But if inflation continues to fall, mortgage rates will likely respond. So while there may be early signs of inflation easing as we round out the year, we're not out of the woods just yet. Keep in mind, at this point last year, nobody was predicting rates would reach even 5%. And when I got first into the real estate business back in 1995, interest rates were 8.5%. So I completely understand when many sellers emphasize that 6% is still a historically good rate. Of course, when rates were 8.5%, I was in San Antonio and we were dealing with only $100,000 homes. So saying 6 to 7% interest rates is historically good is a little like my dad telling me he walked uphill both ways to school in a blizzard when he was a kid. And what about the inventory of homes for sale? So something that really helped my clients last year is I subscribed to a service that tracks all of the leading indicators of the real estate market. And if you'd like to receive a weekly email with all the leading indicators, send me your email and zip code. It'll show up in your inbox on a weekly basis. One of the most important leading indicators is the number of active listings. And as we head into January, it'll be interesting to see how many new listings come on the market. Many are predicting a seller strike, where home sellers with a locked-in low interest rate will refuse to move. And I expect in our area that we're actually going to see more activity for several reasons. And before I get into that, if you are planning to make a move, sign up for one of our upcoming free home selling seminars, either virtual on Zoom or one of our in-person events. To sign up and save your spot, go to copaseminar.com or text seminar to 512-791-7473. Now, here are some of the people that we will expect to be selling this year. First would be investors wanting to sell. My phone is ringing off the hook right now with investors wanting to unload rental properties. With there being no expectation of significant appreciation this year, combined with high property tax bill, many are deciding it's time to sell. So if that sounds like you, get in touch with us ASAP. Some strategies we gave our investor clients at the beginning of last year helped them get their homes on the market and sold for $100,000 over homes that were selling later in the year. Next is the Apple effect. It won't be what we expected. For 3 years, the most frequent question I've been asked is, when is the Apple campus opening? So many potential sellers have been holding out until that happens. And at the December Williamson County update by the Austin Business Journal, it was announced that the Apple campus in the short run won't be what we've been expecting due to work from home and concerns about the economy. So we've all been expecting, myself included, that we would see thousands of Apple employees parachuting into our neighborhoods with suitcases full of money. And I believe many of the sellers who've been holding out for that will realize it's not going to happen and they can't hold out moving any longer. Next is higher property taxes for homestead owners. Property tax values skyrocketed last year, but most properties with a homestead exemption saw only modest increases in the property tax bill. Many properties have an assessed value significantly lower than the market value. So that'll start to change, as most properties in the area will see a 10% increase in assessed values this year, despite market values decreasing. So many homeowners will actually see 10% increases for several years to come as their assessed value is significantly below market value. Next is divorce and higher interest rates. The past few years of low interest rates have been a tremendous benefit to divorcing homeowners, as it made it easier for one spouse to refinance the home loan and keep the property. With higher interest rates, that option is available to fewer homeowners and more have to sell. And rebound sellers. There have been so many listings that were taken off the market this year because the sellers thought, well, next year that's the answer to my situation, right? And they think that the market will be better in the spring. So many of those homes are going to be back on the market next year. And that, combined with all of the other sellers who already plan to sell, will cause a larger inventory of homes for sale, perhaps larger than many experts are predicting. Higher interest rates make it much harder to relocate and not sell. Much like with the divorce situation, lower rates made it easier to qualify for a mortgage on a new property and still keep the current home as a rental. And that's much easier to do when the interest rate on the new property is 3% or less and you have a homestead exemption on your current home. With higher rates requiring larger down payments to keep it affordable, and the reality of what your property taxes will be like without a homestead exemption makes that much more of a gamble. And I expect that we'll see move up and relocation buyers needing to sell. So will we see an increase in panic sellers? So some in the media and even some local real estate agents are trying to scare people into believing we're about to see a crash like 2008. But there are many differences between the real estate market today compared to 2008. And although there's no doubt we will see an increase in foreclosures, we won't see panic selling on a large scale. So after the financial crisis, changes were made to mortgage qualifying combined with the amount of equity average homeowners have today. Because of that, buyers who are expecting a crash will be disappointed. However, some homeowners will experience a crisis, and that's always a tragedy. So if you know somebody that's going through a tough time, have them contact me for a confidential conversation to talk about what options they have before it's too late. So we hope you had a great 2022, and if your plans for 2023, including making a move, contact me today at 512-791-7473 or schedule a no-obligation conversation at copaconsultation.com. Thanks for watching. Make it a great day and make it a great 2023.